Foreign investors are once again pulling money out of Indian markets. In just the first week of the month of December, foreign portfolio investors withdrew more than 11,800 crore rupees. That's roughly $1.3 billion from Indian equities. And according to analysts, the main trigger this time is the sharp depreciation of the Indian rupee. Now, this comes after a near outflow of 3,765 crore rupees in the month of November, adding to the pressure on Indian equities. The pullback breaks what was just a brief pause in October when FPIs had briefly turned buyers after 3 consecutive months of heavy selling. Nearly 76,000 crore rupees exited between July and September alone. Now, with the latest withdrawal, foreign outflows for this calendar year 2025 have now touched 1.55 lakh crore rupees. Experts point to currency concerns as the key driver. The rupee has weakened nearly 5% this calendar year, and historically, FPIs tend to cut equity exposure when the currency slides. There's also an element of year-end portfolio rebalancing, a December trend seen globally as funds close their books ahead of the holiday season. On top of that, delays in conducting the India-US trade deal have added to the uncertainty for foreign investors. But despite the foreign exiters, markets have stayed relatively stable due to a strong domestic buying. Domestic institutional investors, the mutual funds, have pumped in 19,783 crore rupees in the same period, more than offsetting the FPI sell-off. Optimism has been supported by strong Q2 GDP numbers, plus the expectations of better corporate earnings, and sentiment got a further boost after the RBI cut interest rates by 25 basis points on Friday. Now, interestingly, on that very day, FPI flows briefly turned positive at 642 crore rupees despite nearly 13,000 crore rupee of sell-off earlier in the month of December. Meanwhile, in the debt market, FPIs remained mixed, investing 250 crore rupees under the general category while pulling out 69 crore rupees under the voluntary retention route.